If you're someone who loves 1. Quick profits with an in and out entry technique, 2. Limited market exposure time, 3. Quick decision making, then this video is for you, as we will dive deep into a profitable scalping strategy. If you're new here, consider subscribing and turn the notification bell on so that you won't miss any of our videos as we upload. Firstly, we've actually highlighted that this video is going to be on scalping strategy. So what is scalping? It's actually an in and out trading strategy. My first scalping trading style was unprofitable. This was due to the fact that I was not aware of the biggest secret in trading. Is there actually a secret in trading? Yes, there are secrets that will definitely make changes to one's trading strategies. So like any other trading method, scalping requires trend following, and if you fail to validate a trend, you will be caught within the small time frame chops. Have you ever seen a moment whereby when you buy, it sells, when you sell, it buys? You are usually in these small time frame chops or small time frame consolidations. So how do you go out of these phases? So the minute I mastered small time frame trend following, everything changed and managed to see small accounts grow. Right now, I actually trade several prop firm accounts, and these are actually where I get my living from. The good thing is I am going to give you the complete guide of the high win rate scalping strategy. So here are the steps that you are going to follow, and these are for any type of trader, whether you are a beginner, novice, or an experienced trader. Step 1 is always trend validation. We need to know whether the market is going to the upside or to the downside. How do we do so? It is very easy to be subjective when scalping, therefore we need proper rules on every step. Firstly, we need 3 EMAs, exponential moving averages, applied to close, and these being 1. The 13 exponential moving average, the 50 exponential moving average, the 200 exponential moving average. And these will be creating the basis of trend on our time frame of observation, which is the M15 time frame. I'll later get a lot of questions in the comment section. What time frame are we using? In this particular instance, we are using the M15 time frame, which is an intraday time frame or a small time frame of observation. So go ahead and install these ones on your charts. Then we move to the next important step, which is very, very fundamental and the one that is going to give us our entries. But before we talk about those steps, we have an indicator called the BTMM Pro. This is for those who actually need to simplify further their entries. It gives you signals which are sent directly to your phone, and these signals are highly accurate, 65 to 75% of the time over a trial of 30 trades. So you need to actually have a copy, and you get entries like these ones that we actually took from the above signal that was shared with the indicator. I've left the link in the description so that you can get yourself a copy. Back to the video. So I understand that you now have the EMAs on your chart. So the next step is crucial. We are going to be operating with a model that is called reset, shift, trap, and entry. You need to actually know this by heart. It's reset, shift, trap, and entry. So simple steps means a simple strategy, and a simple strategy means simple execution, and simple execution means consistent results. So on the M15 time frame, we need 1. Reset on the 200 EMA. What does that mean? It basically means we need to see the price to move and touch the 200 in whatever direction that it is coming from. Then the second thing is we need to see the market pulling away from the 200 EMA. This now gives us the trend. When we see a shift from the 200 EMA, we now understand that the trend is in that particular direction. Then we need to see a 13 crossing 50, and after that we need to see a pullback to the 50 EMA and then enter at the 13 EMA, as I will show you shortly. So everything we'll talk about goes down to this arrangement, but how? That is the biggest question that you now have. Let me explain. This is the model, the reset, shift, trap and entry model for scalping. And the first step that we've said is to see the market pull back to the 200 EMA or touch the 200 EMA. Like in this case, the green line is the one representing price market. So after the market pulled to the 200 EMA, we need to see a shift away, which is the second step, shift away from the 200 EMA. And then we need to see a pullback, which is basically a trap move to induce traders in an opposite direction where to the direction that they intend to take. Then we need to enter at 13 EMA, candlestick closure below the 13 EMA, but only after there is this particular bounce on the 50 EMA. So in this case, this is the 200, this one is the 50, and this one is the 13. It's reset, shift, trap, and entry model. We need to have much more examples for you to completely comprehend everything that I've just shown you. But before we go to the market examples, check out our free Telegram channel. I'll leave the link in the description box below. Example 1 is coming from card CHF, and this was actually from September 2024. We've said the first thing, we can see that the market went to the 200 EMA. The first step is basically to see the 200 EMA reset. We said it's reset, shift, trap, and entry. After that, we can see the market actually shifting, which is now the second stage. After shifting, we can see a trap move, which is an induction of buyers in this case. Then after that, at the 50 EMA, we had a touch. Then the last step is the entry, whereby the candle closed below the 13, the one in red. So it's reset, shift, trap, and entry. In this case, I've actually found a possible scenario which is in a live market. We can see that there is first reset at the 200, the one in white. After that, we can see a shift. Then after that, we can see a pullback to the 50. And what are we now expecting? Entry, and then we scalp our way to the upside. So where do we put our stop loss? Stop loss is always put below this particular structure and take profit at 1.5 R, because we do not want to stay as much as possible within the market. So we want to just have a quick in and out scenario and we are done. Basically like that. So it's reset, shift, trap, and entry. Reset, shift, trap, and entry. Those are the steps that you must memorize and you'll be able to apply them on your charts. On that note, we've come to the end of this video. Check out this video for further knowledge.